Some big raises in the last week.
Is there something in the water in San Francisco? Did a big gust of wind come through the Bay Area and wake up all the venture capitalists? In the last 24 hours alone, we've seen 3 sizable deals, big fundraisers affecting valuations, Reddit being the most notable. $700 million, taking its fundraising to the year closer to $1 billion. Of course, we all know about Reddit and what that is. But Carta, which does software so startups can manage their investors, also raising funds, $500 million. And Divvy, which helps basically potential homeowners rent and buy their home along the way. And when you look at what happens to valuations with rounds like that, really interesting. Bring up those valuations. Reddit's latest is $10 billion, up from a reported $7 billion in its latest fundraise. Carta doubled to $7.4 billion. Divvy quadrupled to $2 billion. And what's so interesting is these 3 deals alone take US startups backed by VCs, the equity investments in those startups to $173.3 billion year to date. But this isn't just about San Francisco, Emily. It's a global story. And if we look at the funds raised in the second quarter of 2021, $156.2 billion in 1 quarter alone globally. That's venture capital into startups. You can see that whatever's going on with the pandemic, VCs are not deterred. In fact, this is the latest second quarter. Go to the second quarter a year ago, 2020. We've more than doubled the money that's going into startups, and certainly more than pre-pandemic levels as well. So those are the numbers. That's what's happening. I don't know the reason why. Maybe startups need support. Maybe these VCs are bullish about the economy coming out of the pandemic. But there is certainly activity. And as you know, Emily, it keeps me on my toes.
All right, Ed, thanks so much. For more now, let's dig into why San Francisco and venture capital has suddenly woken up and how this is all evolving as remote work continues across Silicon Valley, startups and venture capital firms. I want to bring in our deals reporter, Katie Roof. So, Katie, first of all, look, obviously, always these fundraisings happen earlier, and then it just seems to be that in this case, a bunch got reported at the same time. Or is there something in the water?
Sure. Well, I mean, it's been pretty active for quite some time. This last year, it just seems like day after day, there's a new unicorn, maybe 2 unicorns a day. Things are growing really fast. A lot of startups are seeing their valuations quadruple year over year because it's actually due to a few different factors. Right now, there's a lot of money in the ecosystem, and so that competition is driving up prices because VCs have had good returns for their LPs. In the past few years, LPs have been willing to put more money into lots of new funds. So there's just a lot of capital to deploy that's out there right now. And so it's gotten so competitive with Tiger Global and a lot of these, big firms putting in money. And so sometimes founders are taking the highest valuation they can get. And that's part of it. It's also because on the stock market, a lot of tech stocks have done really, really well. And so those valuations, those market caps are used to justify these private valuations. They're using these sky-high multiples to say, hey, well, if that company gets, a really high multiple and it's in the same sector, then we should be able to value this company at a similarly very high multiple.
So is this a trend you think will continue or pick up, especially as we go into September when everyone gets back from their summer vacations?
So, sure. So there's mixed, sentiment on this. Obviously, there's still a lot of capital to deploy, and so investors are going to have to keep deploying this money in order to get returns for their investors. So I think funding rounds will continue for a while. Whether they will still have these same multiples, a lot of people are predicting that there will be a little bit of a correction there, at least in some of the categories. Some people don't feel like this is going to last forever. Definitely, there are going to be some hot companies that, are going to be the next Facebook and worth, a lot of money, but there are going to be some companies that actually fail to materialize. They're going to fail to achieve, these really high expectations, and it's just going to be paper money, and those valuations aren't going to be a liquidity event at that value.
So I wonder if at the same time we're seeing, bigger startups get bigger, get more fuel to continue to grow. Are we also seeing some smaller startups that just can't make it work, especially in these trying times?
Sure. So a lot of money has been put in the later stage, partly because of all these growth stage investors. So, it's always hard to launch a startup and get it off the ground in the early days and get your pitch, seen by investors and these days even meet investors, especially since so many people are working remote still. So I think certainly a lot of this depends on the stage, but it seems like once a startup shows any traction, VCs are just chasing them down to try to get access to these startups because there's just so much money out there.